Okay, hello everyone. Once again, welcome back to our class. So today we are going to discuss the precautions to be taken under income method, okay? Now you see, the precautions of the three methods are similar to each other, okay? So once you understand the precautions of any method, you'll easily understand the precautions of even other two methods. So listening carefully, we will again explain in brief. Point number one is, only factor incomes which are earned by rendering productive services are included, which means those income earned by rendering your services will be included in national income, okay? But all types of transfer incomes like old age pension, unemployment allowance, scholarship, etc. are excluded. Why? Because these are not earned through rendering a productive services, okay? Point number two is, sale and purchase of second goods are excluded. Why? Because the value of second goods are already counted at the time of selling in the first place. But remember, commission paid on sale of second goods is included as it is a reward for rendering productive services, okay? Likewise, value of shares and bonds are also not included in national income because these are purely a financial transactions, okay? Point number three is, imputed rent of owner occupied dwellings and value of production for self-consumption are included, which means the value of a rent, even if it's not rented out and utilized by the owner himself, will be included in national income. Why? Because every house has its own value, even though it is not rented out to others, okay? And value of production for self-consumption by consumers himself or herself will be included in national income. But value of self-consumed services, that means the services contributed by housewife, will not be included in national income as it is difficult to estimate or measure, okay? Point number four is, income earned from illegal activities like smuggling, black marketing, etc., as well as windfall gains, that is from lotteries, are not included in national income, okay? And lastly, direct taxes such as income tax, which are paid by the employees from their salaries, and corporate tax, which is paid by the joint stock company from its profit, are included. Now, what is a direct tax? Direct taxes are those taxes which are paid directly by employers or employees and company to the government, okay? Or in other words, we can say direct taxes are those taxes whose burden or impact of incidence cannot be shifted to another person, okay? But wealth tax and gift tax are excluded since they are deemed to be paid from past savings and wealth tax from wealth. Okay, so what is a wealth tax and a gift tax? These wealth tax and gift tax are a tax imposed on one's properties and past savings, okay? As per wealth tax 1957, any person whose wealth tax exceeds 30 lakhs, 1% of tax will be levied on it. Keep that in mind. Similarly, indirect taxes like sales tax, goods and services tax, GST, excise duties, which tend to increase market prices, are not included as national income is taken at FC and not at MP, okay? So what are indirect tax? What is an indirect tax? Indirect taxes are those taxes which are imposed on goods and services, okay? Or in other words, we can say indirect taxes are those taxes whose impact or burden of incidence can be shifted to another person's, okay? There are many kinds of indirect taxes like sales tax, excise duties, GST, custom duty, auto tax, value-added tax, entertainment tax, etc., okay? So sales tax are those tax imposed on goods and services. Excise duties are those tax imposed on manufacture of goods within India, okay? And the most important one here is GST, goods and services tax, okay? This GST was implemented in India on 1st July 2017. It is considered to be one of the most important economic reforms in our country, okay? Now, before 2017, a producer or an entrepreneur or one has to pay all kinds of indirect taxes in order to buy something from other countries or in order to start something new, okay? But after the introduction of GST, after the implementation of GST, one has to pay only one tax. So, GST is also known as the replacement of all kinds of indirect taxes. Okay, right now the rate of GST are classified into 4 parts: 5%, 12%, 18%, and 28%. Okay, now you see, regarding this GST, if you want to know more, you can always Google it, or you will find so many sources in YouTube, or you'll even find one video by Dreams Unlimited under GST. Okay, and if we get time, if time allowed us, we will surely discuss again about this GST for your general knowledge in class. Okay, so that's all for today. Thank you all.